Hope everyone's had a good Christmas. I thought I'd do a stream and get into some charts, kind of going through expectations of what we're going to get in 2023, some projections, some TA, but yeah, let's dive straight in. So just looking at the SPX first of all, and I guess this is just my kind of general thoughts on 2023, particularly the first half. Not too sure what we get in the second half, but particularly the first. So bullish commodities in general, still going to be bearish risk assets in H1. I do expect CPI to start coming down, so generally should start seeing inflation coming down in the US. But to caveat that, I do expect it to kind of ebb and flow. General trend down, but I do expect there to be spikes back up here and there, and we'll go to why that might be in a minute. Bearish US dollar, bearish Canadian dollar, bullish Japanese yen. I think everyone's kind of already on those trades. Bullish long-term bonds, things like TLT, which we will get into. And I'm expecting 2023 to kind of be a year of ranges, pretty ruthless ones as well, with high volatility and generally more pain. So plenty to look forward to in 2023. Just getting into the SPX chart, and I think just to kind of highlight really where I'm very interested in a long-term buy, and that's going to be down around the 3.2 level. I think quite a few people do have that level in mind as well, so not great that it's consensus, but we'll monitor it and see how it goes. But just from a TA standpoint, it kind of aligns really nicely. We've got this long-term uptrend here. This would give us a nice 3 tap down at 3.2. I think ideally, what you'd want to see is just dip into this, high volume zone here, and then come straight back out of it. So, kind of expecting this type of move. That area is what I'm looking to buy in 2023. I think once we get down to this 3.2 level, risk assets should be a lot more attractive, particularly from an earnings standpoint. Where does that kind of line up? That's back end of next year. So back end of 2023, September, October, November, December, around that kind of time is where I'll be looking to buy, and it's going to be around this level here, right into this demand zone. So yeah, that's pretty much it for SPX. Looking at the monthly chart on a long-term basis, I don't see any base case for being bullish risk assets just yet. So we've got quite a bit of work to do. Looking just more at the daily chart, that there's still going to be plenty of opportunities to trade. I think we'll come down here at some point, but still plenty of opportunities to trade, but only really going to be looking to try and trade the range, and really only looking to play level range deviations. So quite a few trades will become available, I think, but only really looking to play the extremes, and only really go when I've got those level reclaims. So there's plenty to see in 2023, I think. As I said, I think it's going to be the year of a lot of ranges. But yeah, playing the mid levels, playing the bottom of the range, playing the top of the range. Really, the only thing that I'm interested in doing. Otherwise, you're just going to get chopped up. And still, looking at the hourly chart, it's quite easy to still play the ranges and get trades off every week. But yeah, generally expecting more down, and only really looking to trade the extremes. But ultimately, my target is going to be around that 3,200 level to look at some serious long-term buys. So that's pretty much it for the SPX. If you look at the NASDAQ, I've kind of played around with a lot of different views for this. This is just the range on the smaller time frames. But I'm going to be looking around this level here, again, similar to the SPX chart, coming in to this high demand zone, dipping into it slightly, and hopefully catching the reclaim of this long-term trend line here and give us a nice 3 tap bounce. But realistically, yeah, I expect it to come down to this level here, find a range for a little while, and start kind of moving back end of 2023. But God knows how long the recession will last. I don't think anyone really knows. I don't know how long we're really going to range for. Just kind of a random guess at the moment. Just kind of saying that the back end of 2023 will look better. It's just a guess. Really just have to play it by ear and kind of see what happens with the data and take every week and a month as it comes. But yeah, for me at the minute, the Nasdaq's just looking like it's going to fall out of this smaller range here, and we're going to complete this bull flag, and it's a nice target. We've got a nice target for the bull flag, for the bear flag here. And yeah, this long-term trend line straight into the high demand zone. I think this is where we see a real nice long-term opportunity to buy the Nasdaq. And as I said, I think valuations will be a lot more attractive down at those levels. What else were we looking at? QQQ, pretty much the same script. This is quite interesting. We're on a nice, monthly trend line here, tagging it now. But I do expect it to actually fail. And similar to the Nasdaq, we've got this bear flag going on here. Downside target is around about this 200 level. So again, just kind of expecting it to come down straight into the demand zone. Got quite a lot of volume down here, and then push back up and reclaim this level. But again, I think it's going to be quite a difficult year. A lot of ranges. But I don't expect us to hold around these levels. We're definitely going to see lower lows. So just bear that in mind. What else were we going to look at? ES. What have we got for the ES? Yeah, very much the same sort of script again. Actually quite a nice clean chart, that. So yeah, just looking at the monthly here. Again, I think we're going to come down into this demand zone. And hopefully we're going to hold this long-term trend. But this area here is where I'm very interested in buying ES and risk assets in general. So just really having to wait, be very patient and wait for this drawdown to continue. Again, just looking at the smaller time frame, looking at the daily, we can still play the range. Deviate down, reclaim, long to here, deviate, short from here to here. There's plenty to go at. It's just really taking your time and, waiting for the opportunities to present themselves and not trying to overtrade any of the actions. So plenty to, there's still plenty there for us. But as I said, longer term chart where we're really interested in adding some long exposure for the long term is down around 2800. So yeah, that's pretty much it from the indexes anyway. All pretty much similar theme. I think we may. It's so hard to predict. I think we may still get a move to the top of the range. We might not. We may get a move to the bottom of the range and come back in. I don't know. I think we just have to play it as it comes and just see what the chart gives us. And yeah. So that's it. Looking at some commodities, because I think this is where there are some opportunities this year. And I think the main reason why I'm interested in commodities is generally they do perform well heading into a recession. So the months where we're heading into a recession, they generally perform well. And then once we hit recession hard, you see demand fall off, and you start to see things come down. But commodities, I think, are going to be an interesting place in 2023 because I think you're seeing it already. I think anyway. China, some of those other Eastern nations using commodities as a financial weapon to increase inflation in some of the Western areas. So I think it's going to be a very tricky tricky year, but I think just looking at wheat, for example, we've come back into range here. I think that we're going to get a bit of a mixture of the East using it as a bit of a weapon. So we're going to get, price increases off that, China reopening as we've seen already. But at the same time, I think, that level off in demand is going to play into things. So it just makes a lot of sense to me that some of these things are going to range quite hard for a lot of the year. Oil being kind of the main example. Just looking at the daily chart here for oil. Again, China reopening, quite a bullish narrative for oil. You've got a lot of people calling for higher oil prices. I think we do see it. But I'll be exiting any of my longs at the top of this range here and just seeing what happens. I'm currently long oil from these levels down here. And I'll be looking to take profit at the mid-level and some profit at the top of the range as well. But I think just due to the dynamics politically and with the demand destruction in the US, I just see more of a case for oil to remain in a bit of a range for the majority of 2023. I looked over here and drew this Wyckoff accumulation pattern here. I think this is what we're in at the minute, and I think we get a lot of this. But look, if this is able to break to the upside and we flip the top of this range as support, and we see price acceptance above this level, then yeah, you know what, we could see oil getting back to the top of this longer term range here, back to 115s kind of levels. So yeah, just really taking each day as it comes, playing the ranges, playing the level reclaims, and really only focusing on some key areas. Wheat, I'm expecting this to again get to the mid-level or the top of this range here. There's it's not really, there's nothing really too complicated about it, to be honest. I think it's quite straightforward. If we're not able to do this, then maybe we come back down to here, but at the moment, just trying to play the range. Looking at gold. Which is a bit tricky. Overall I am bullish on gold. But at the minute, we're not really in a great spot on the higher time frame. I'd like to see us break out above the top of this range, flip it as support, and then I'm thinking, okay, gold's going to go on a much further run. But at the moment, just a little bit tricky. I'm currently playing gold on the daily time frame. And yeah, for me, I really did want to see it come down to the 160s again on GLD, where I was going to be looking to add a position. But at the moment, for me, we're just at the top of this range. We'll see how we get on here. If we can flip this area as support, then I expect that we're going to go back to the 185 level. But for the time being, it's just poking its head out the top of this range again. I need a little bit more evidence and confirmation that we've flipped this as support before I consider going long up to about 185. But really, the setup I was looking for here is down to this 160 level, which currently I am not getting. And I was expecting that we were going to get a little pop in the dollar before all is said and done. But it looks like we're not getting that at the moment. Really quite a frustrating one for me at the minute, US dollar. We've come down to this this demand zone here. We've bounced. But, oh God, man, come on, get moving. Not really done anything. And all I was really looking for from the dollar before we go down further as we head into recession further into a recession, was just to take out some of these lower highs. It's quite an easy pattern for it to follow. Just take out some of these complacent shorts here and then come back down. But it's taking its sweet time. It's taking its sweet time. So yeah, that was going to be my entry on gold. If we could hopefully see that move in the dollar, but we're just not getting it yet. I think if this falls out and we come below this 102, 103 area, then I'm gonna have to wait a little bit longer for a pop in the dollar. But yeah, for the minute, still kind of just in wait and see mode, and hoping we get a little bit of a pop before we come back down, and that can hopefully give me a better entry on some of the metals that I'm looking at. So yeah, just kind of waiting, definitely not over trading during this week of low volume. And yeah, let's just see if we get that final pop in the dollar. What else was there? Yeah, cord was another one. Again, I think just in a nice, easily tradable range here. Just waiting for it to come back. I've took a long down here, waiting for it to play the mid-level, waiting for it to come to the top of this range here. May short it on a rejection, and then, take profit back down at the mid-level. See where we go from there, and I'll be looking again to go long back down at the range lows. So just looking to play a lot of these ranges within commodities for certainly the first half of 2023. TLT and the 10-year was an interesting one. So I think that the US is going to continue raising rates. I don't think they're going to slow down yet. That may come, halfway through the year, a little bit later on in the year. But I'm not expecting ridiculously high rates in 2023. I think they're just going to pause at some point, see how things go. And that brings us on to the 10-year. And I'm pretty sure we've seen the high in the 10-year. The only thing that can caveat and stop that is if we get real nasty, persistent inflation that just won't go away, and you'll start to see some of the longer duration, the long end of the curve, get affected, and it'll continue to climb, and it won't just be the 2-year that's going up. So, inflation could scupper this, but as I said before, I am expecting inflation CPI to trend down in H1 2023. So in the minute, I've just been looking for the 10-year to complete this move here, taking out the lower highs, possibly getting as far as up to 3.9, and then coming back down. And then we've just got to see how this pattern continues to unfold. Do we get a cup and handle and we go back up? Do we fail and go lower? Have we got a bit of an inverse head and shoulders going on? Not too sure. We just have to keep an eye out and see. But for the moment, I'm currently playing this on the basis that we take out these lower highs and the complacent shorts, and then we start to come back down, which presents an opportunity for the TLT, the 20-year Treasury bonds. So I've currently got a long play on this from the mid-level. We did long this around about here and get a really nice trade-off up to the top here. Just re-entered again today, actually, at this mid-level point as we're taking out these levels on the 10-year. So this might go a little bit deeper. If it does, I'll pick up some more. And I'll be looking for if we do go below this level here, I will be looking for the reclaim. That's actually the setup. I'd actually buy more than what I've currently got at the moment, is if we can just get that reclaim. And I expect that we're going to then go back to the top of the range, and just like every other kind of setup I've shown you today, just waiting for the confirmation of the reclaims, take profit at the top of the range, and see, can we flip it as support? If so, then great. We may be going further, and we can look for an additional setup when it becomes available. So that's kind of it, really, to be honest with you. I mean, we've got We've got BTC. Not that. Not that. Jesus Christ. You know, Bitcoin. Just no real interest. Like, absolutely zero interest in getting exposure into this yet. I think Exo's stream was great. You know, I probably don't really need to go into that much detail. I'd probably just advise you to watch that, to be honest with you. But yeah, it's very similar to the equity indexes that we looked at the start. There's just like such an inefficiency down here, such a light amount of volumes that I expect that to just get filled at some point. You know, down to 12k. So, you know, no interest. You know, we might see something like this and just mess around all the way back up to 22. I don't know. I really don't know. I just know that when we certainly don't have the landscape and the setup to be going, you know, much higher from here. So for me, it just makes sense to sit back, relax, and just wait for it to come down into this zone, or for something to drastically change in the economy, in the global economy as well. So it's just a patience game. Patience game and a waiting game. Trying to think if we can take you through any other charts. Not much. I think we're just going to range in here through to year end. Pretty standard. And then, you know, the week we're back, we might start getting some crazy volatility. The only other play that I was looking for really was VIX. I don't know, TA in the VIX is bad, but screw it. I've been waiting pretty patiently for VIX to get down to these levels here. Again, just deviate, reclaim, flip a nice long in there, back up to the mid, flip long again, back up to the top of the range, and then potentially short it back down. Quite a few trades there, really, that should keep anyone busy, you know, for the first half of the year. So there's still going to be plenty of activity from my side anyway. But it's going to be patient and it's going to be selective only in, you know, the markets we've gone through today. Until something really changes, I've got, zero interest in risk assets, and I would just be waiting for us to get down to the levels that I've outlined. You know, for SPX, down to around 3.2. Just looking at my notes again here to see if there's anything else. No, not really, guys. Not really. Quite a light stream. What, 25 minutes. If anyone's got any more questions for me, just hit me up in the group. But other than that, yeah, pretty straightforward. If I see anything else appear, any other markets that look interesting, then I will absolutely let you know. But for the time being, yeah, it's just commodities, bullish, risk assets, bearish, expecting the CPI to come down in H1, but I'm expecting it to ebb and flow quite aggressively throughout the year as we see the East use commodities as a financial weapon. Bearish dollar, bearish CAD, bullish APY, bullish long-term bonds. That's it. That's your lot. But I appreciate anyone that's tuned in and listened. I hope you have a great rest of the Christmas break, and I look forward to returning. I'll actually be back on Thursday the 29th, but you know, back fully firing on the 2nd. But yeah, have a good New Year, anyone, and yeah, thanks for tuning in.